Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Gold prices moved little on Tuesday but held on to recent gains as investors awaited more signals that U.S. inflation was moving away from peaks here these years. Spot gold was nearly on once, while gold futures fell and once by both instruments rose over the past three sessions as the dollar retreated from a 20-year high hit last week. The greenback fell further on Tuesday with the losing after 5 consecutive days of losses, a mix of profit-taking and anticipations of data showing more easing in U.S. inflation. We get on the greenback in recent sessions. U.S. CPI inflation data, which is due out on Tuesday and expected to show inflation is to an annual rate of 8% in August from the prior month reading of 20%. The reading will mark its second straight month of this line from a 40-year peak hit in June and will indicate easing U.S. inflationary pressures on this line in full cause and after a slew of interest rate hikes by the Federal Reserve. But markets still expect the Fed to keep raising interest rates at a steep pace for the remainder of the year, given that inflation remains well above the central bank's annual target of 2%. Traders are pricing in over 90% chance that the Fed will raise rates by 75 basis points in the upper end of expectations next week. This is widely expected to boost the dollar and treasury yields, while keeping gold prices depressed in the near term. Gold has plummeted from highs it hit earlier this year as investors saw better return from the dollar and sovereign debt made surging interest rates. Among industrial metals, copper prices continues to trend higher, driven by a weaker dollar and expected supply disruption from a strike at Charles Exxon mine. Unionized worked at and Escondida, the world's largest copper mine, votes to go on a strike beginning this week. The move is widely expected to tighten global copper supply, benefiting prices. But copper also has to contend with sluggish demand in China, the large import of the red metal. U.S. shares rally while oil climbs, dollar dips. New York Wall Street Equity Index closed higher on Monday as some investors bet that August data will show easing U.S. inflation while others were encouraged by news that Ukraine had made progress against Russia in a war that has hurt the global economy. After falling to its lowest level in more than 2 weeks, the dollar priced some losses against a basket of currencies a day ahead of the closely watched U.S. Consumer Price Index data, with some investors hoping slowing price increase will show the Federal Reserve's aggressive interest rate hikes. U.S. Treasury yields, after falling earlier, were higher in afternoon trading as bond investors were also eagerly awaiting consumer price data. Consumer price data due on Tuesday is expected to show headline inflation rose year over year in August versus 8% in July. Core CPI, which exclude food and energy prices, is expected to show a rise of versus in July. If inflation decreases, the market is hoping this translates into small rate hikes. After the September Federal Open Market Committee meeting, said Robert Public, senior portfolio manager at Ducato Well in Fairfield Connections. Because of that, you're seeing a risk on type of mentality today. Paul said the market has now fully priced in 75 basis point hike for September. The Dow Jones Industrial Average rose point or gains. The Pan-European Index had closed. European stocks had risen after Moscow on Saturday abandoned in its main bastion in northern Ukraine in a sudden collapse of one of its principal front lines. Markets rallied overnight in a follow-through from Friday. You have stories about Ukraine making progress. Ultimately, a move beyond the war is a positive for everybody. Obviously, it still remains to be seen, but is helping fuel the optimism, said Michael Roque, chief market strategist at Jones Trading in some for Connections. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.